An unprecedented wave of capital is flooding South Korea's startup investment market in 2026. 9 deals have crossed the 100 billion won threshold, with total new equity investment reaching 2.79 trillion won. Monthly investment figures have repeatedly topped 1 trillion won, and some analysts now project that the first half of 2026 alone will surpass the full-year total from 2025. But look closely at who's writing the checks, and something stands out by its absence. The names missing from the biggest deals in Korean startup history are global VCs. The investors behind these 9 mega deals read like a directory of domestic institutions, government-backed vehicles, the National Growth Fund, Korea Development Bank, and the Advanced Strategic Industries Fund anchored the largest transactions. Domestic heavyweights like Murray Asset, IMM Investment, Adonam Investment, and Stonebridge Ventures covered the mid-tier deals. Corporate strategic investors from Hyundai, Samsung, and SK Networks filled out the rest. Sequoia, SoftBank Vision Fund, Tiger Global, Andreessen Horowitz. Not one of these firms appeared in a deal above 100 billion won in the first half of this year. This marks a sharp departure from recent history. The landmark growth rounds that put Toss, Curly, Yanalia, and Zigbang on the global map were led by exactly these kinds of international investors. This year, virtually every deal above that threshold has been driven entirely by domestic capital. A handful of foreign-affiliated firms did participate, but these are Asia-focused mid-sized funds, a different category entirely from the global major houses. The mega transactions were Korean, through and through. There's a reason the growth stage playbook has traditionally involved international investors. And it isn't just about the money. Global VCs bring a specific bundle, alongside their capital, overseas business development, introductions to follow-on rounds in other markets, and the network and operational knowledge that turns a Korean startup into a credible candidate for a Nasdaq listing or international M&A. When Sequoia or SoftBank leads a round, it's also a signal to the rest of the world that a company is worth watching. That signal and the ecosystem connections behind it is currently missing. The first half of 2026 can be summed up as state-directed concentration policy capital, deployed heavily into AI, and semiconductors deemed critical to national competitiveness, with private domestic money clustering around those bets. The gap left by global investors remains unfilled. Korea's startup market is bigger than ever. Whether it's ready to go global on its own terms is a different question entirely.